Good afternoon, guys. My name is CryptoCape, and today I want us to discuss order types. The types of orders which you can place on the Binance Exchange. Many of you have placed one or two orders, but then there are some things still a little bit confusing to some, like how to use stop limits, how to place stop loss and take profits, and the others. So I've decided to explain in this very video how to use the types of orders we have on Binance. So to start with, this at this right hand side is where we have the place order tab. This is the buy tab and this is the sell tab. So if you want to sell on the market, probably this is on the spot market, okay? So if we have a coin like this and we want to sell, we come to the sell tab, and if we have Bitcoin or maybe USDT and we want to buy some coin like TWT, then we can do that on the buy tab. So assuming we want to buy this particular coin, so this is the limit. What this means is that you post an order to the order book. This is the order book. This is where you can see the list of orders in which people wants to buy. They place an order to the order book, and when price gets there, it fills their orders. And this trace is a past orders which has been executed on the exchange. So limit is like a pending order. When you post to buy, that means you set a pending order into the order book, which then reflects, and whenever price comes to that order line or price line in which you have placed the order to buy, it will fill your order. So the limit order is simply a pending order. You wait for price to come to you. So here we have the price. So assuming you want to buy this particular coin at the very top of this box, the price level of 0.3282, then you just input the price there, 0.3282. Then the amount you wish to buy. The amount you will be able to buy will depend on the amount of USDT in which you have. So assuming you have some decent amount of USDT and you want to buy probably 2 TWT, you type 2. And if you do not want to type the amount you wish to buy, you can use this slider. Maybe 25% of your balance, your USDT balance, or 100%. You can use a slider. You can also click at different points and it will move your orders towards the amount or the quantity you wish to buy. After that is done, all you have to do is click on buy. So let's try this. So the moment I click on buy here, order failed. Value minimum buy order is 10 USDT. That means I cannot buy bet. Assuming I have more than 10 USDT on my balance, then my order will be placed into the order book, and then you will be able to see it in your open orders. Any other closed, open and closed will be in your order history and trade history. But once the order is open and available on the order book, then you will be able to see it on your open orders. So that is for limit buy. It is the same thing on the limit sell. But then let's finish with this buy side first. So the market order, what the market order means is an immediate fill. Like you want to buy an amount of this coin, assuming you want to buy all the USDT I have on the market order. You can see you cannot input the price line here. You cannot input the price at which you want to buy here. This is because the market will fill your order at any currently available price. If you are buying a lot more, this is currently the last price, 3497 is currently the last price. This means somebody bought at that particular amount. But if you look at the order book, we have 3491, which is also the last price, and we have an amount of 1127 TWT. So if you are selling to this person and your order is bigger than this amount at this very price, once it takes in this price, once you set to this price, I mean this amount, it will proceed to the next in line until your order is filled. And if you are buying, the highest bid, I mean the highest ask available now is 12,300 at this very moment. So if you are buying like 20,000 TWT, this is not enough to fill your order. So it will take that amount, you will buy that amount, then it will go to the next amount in the next price or the next price line in order to fill your entire order. So if this first order is not enough to fill your order, it will be simply proceed to the next one and proceed to the next one, proceed to the next one until your order is completely filled. So no particular price, only you will get an average price only when your orders are completely filled. So it is a market order. It executes at whatever market, whatever price the market is trading at that particular time. That is that. And we have the stop limit. This is the one that confuses people a lot. And what this means is actually simple. We have stop, which means assuming if you are using a buy stop, this is a buy tab. So if you are using a buy stop, it means you want to buy when price gets to a particular level, but you do not want to place your order on the order book until price has reached a particular level. Now let's assume you trade as a breakout trader and you see this point of resistance is coming all the way from here, right? You see this point of resistance. You believe price might come into it and then come back down. You do not want to buy as the price is crashing because you do not know if this level will hold the price or the price will continue downwards. But you believe that the moment price comes into this support, into this resistance and breaks it up, it is likely to retest this as support and continue up. So what you do is you want to put a stop order here that the moment price trades into this level, you want to put a buy order at an even higher level. This space between this stop and limit price is to ensure that your order fills, because the moment price comes into it, it may not come back down. You can also place, if you believe the price will come back the moment this breaks, you can also place another here. So what this means is if price breaks this high or comes to this high, you want to use that as your stop price. So that is 0.3884. That is the stop price, which is this middle one. And if you believe the moment price breaks this level, price will continue to rally to the upside, then you should place your order into the order book and fill your order before continuing to the other upside. That means your limit price will be the price line at which you wish to buy, either here or here, but ensure that there are some space between here and here so that your order can easily be filled, because most times price will break it and rally up instantly in a very fast, with a very fast momentum. So you want to ensure that the moment it breaks, it's able to pick your order up, because sometimes before the engine places your order, the moment the price reaches the stop, if the engine is slower than the momentum with which price is rising, price will be far gone before your order is placed into the order book. So if you wish to buy at this point, then this point, this price line will be your limit price. Limit price is a pending order, right? Which means the moment price breaks above this very high, the moment price breaks above this very high, and you should put an order into the market for you to buy. And this will be filled instantly because you are placing your trade above the market price if market is still below it. But if you believe price will retrace down a bit before continuing to the upside, then the moment it breaks, you can put your limit price at a price lower if you believe it will retrace back into it. But most time it will not retrace back. So that will be your limit price, either 0.424027 or any other price lower than the breakout point. So it will take your order alongside and rally with it. You fill in the amount you wish to buy, then you click on buy. So that is for stop limit. Stop limit can also be used as stop loss function on spot exchange. On spot trading. But you can use stop loss function when on the buy side except on the sell side, because spot is only one way trading. It's just buy and sell. You cannot short the market, so you cannot have a buy stop. I will explain that when we get to the setup. So there is one other thing, a new function, not really new, it's a new function, which is the OCO. That is the one cancels order. One cancels order, like one order field, we cancel the other order. So this is placing two orders at the same time. It is good for placing stop losses and take profit. The stop loss and take profit will be on the sell side. You can also use it to place buy trades, like you believe this price level which price is currently sitting at, you believe it is likely to come into here, depending on your strategy, whatever price you want to buy the coin at a lower price. If you believe price will come into it, or you can also believe price may not come into it, because sometimes price is very silly that price will just come a bit into the area, won't quite touch the waiting price line, then rally to the upside. So you'll be front run, you'll miss out on that very trade. So what you do in these instances, when you believe price may not come into the area which you are waiting, but you believe price may break this resistance and use it as support, then OCO will come in handy. What this means is, this is a price at which you are willing to buy lower, which is lower than the current market price, and that is this very line. Assuming you are buying at this very line here, that will be 0.3282. That will be your price. That is the pending order which you are placing. And the other order, in order to be filled in this trade, in case you do not get filled at this particular point, is as a breakout trader. If price breaks this resistance to the upside, then you want it to be filled. You want to be filled along with it. So your stop will be the moment this price breaks, maybe just a few sats above it, then that will be 0.3912. This means when price reaches this price line, it should stop and place your order into the order book. So you want a bit higher price level or limit price, so your order can be filled out. So let's say your limit price will then be here 4240. Then you select the amount you wish to buy. So once you place this into the order book, your pending order will be the one to appear on the order book. The breakout trade won't appear on the order book. Now this is what the OCO does. One cancel the order. This is two trades, right? This is the trade number one, and this top limit is a trade number two. So it's encompassing a limit order and a stop limit order into one single trade. So if price eventually comes into your buy zone like this, assuming price comes into your buy zone, you believe price may not come into the buy zone here, which is why you are placing another order on top as a breakout trader. So what if price then comes into it like this and then comes back up? This is another buy order. This is the first buy order. This is the second buy order. What will then happen? The moment this one fills, the moment this order is taken, as in the moment you buy at this particular point, this order here will be cancelled. So it doesn't lead to you buying the coin twice. So the moment this one fills, this one will be cancelled. Or if you do not get a fill at this particular point, like price comes just a bit shy of it and then comes to take you in here, then the moment this order is bought, this order here will be cancelled. So if price comes back into it, there won't be no order here anymore. So you do not have to buy it two times. So that is the beauty of OCO. You can actually place two buy trades in a single trade, and if one fails, it will cancel the other out. That is why it's also good to use it for stop losses and take profits. Now, let's get to the sell side. The sell side, the limit is the same as I have explained. The market is same as I have explained. The only difference is you sell here instead of buying. So assuming you have some coin already, as I have some TWT here, so if I wish to sell, I just put the amount or the price line at which I wish to sell, which is above the currently trading price, I can also put the same trading price to just fill it immediately. Then put the amount I wish to sell, or I use a slider. Then I click on sell. Then my order will be filled. The same thing as a market order, just the inverse. Here you do not input the price, you just input the amount and sell. So it will sell at whatever price the market is trading. If you have very big orders, you know, to sell, you have to sell to somebody who is buying. So if here is 39,000, 36,000, this order is very big, bigger than what I have, right? But assuming what I have is bigger than what is available and I'm using market order to sell to a buyer, then I will sell to that very buyer, then sell to the buyer next behind it, means the next in line, so until I am completely sold out. So the market will sell at whatever price the market is trading at that particular time, and it will then give me an average overall price which I have sold. This is a stop limit as well. This, you can use it for a stop loss, or if you, assuming you can short this market, you can use it assuming you say if price breaks this very low, you want to sell. But since you cannot sell, you cannot short a spot market, so you can do that. But you can use it as stop loss. Assuming I have bought this coin, assuming at this very level, and I believe price may break this zone. So if price comes to break this zone, I want to put my stop order around here. The moment price closes below or breaks this point, I want to sell here. The difference between the stop and the sell is to ensure that the market is not moving so fast that by the time the engine is placing my sell stop into the order book, the price is not trading way below. So you have to give some little distance. So what I will do in this case to use it as a stop loss order is my stop will be a bit just below this box, which is 0.3040, and then my limit price at which I want to sell will be here, that is 2931. Then the amount I wish to sell. So I will place this into, it will appear in the open trace. I will be able to see it in the open trace. Okay, I think I should be able to place this. So assuming price breaks this, then I want to sell. So stop, confirm. Oh, okay, let me do this. As you can see, stop limit has been placed, and here on the open order I have the order placed here. Stop limit, type is stop plus limit, sell. So the price, the amount, the total fee, the total amount, the condition. So the condition is the moment price comes below this red line, which is here, stop limit 0.0 trigger, then my order will be placed into the order book. As you can see here, there is no my price, my order is not in the order book until this very red line is broken by price. That is when my order to sell will be placed into the order book. So that is how we can use this as a stop loss order. And I have explained, if you can short this market, it is the same process that you will use to short it. But when I go to the official side, I will explain that in detail. And here as well, we have the OCO, which is the one cancel the other. So here, assuming we have bought this coin, as I have this coin now, and assuming I want to sell when price gets to this high, assuming I want to sell. So my price to sell will be 0.409. That is my limit price to sell. That is the price here. Then I want to place a stop loss order as well in case price comes below this very low. So my stop price will be, assuming if price close below this box at this particular highlighted price line, I want an order to be opened in the order book to sell at this line here, which is then my limit will be 0.2931. Then the amount, assuming I want to sell all I have. So this means if price gets to this stage, as me, if price rise from this particular level it is right now and comes here, my coin will be sold. As you can see, it will be sold, and the moment it is sold here, this stop loss order will be cancelled. But if that is not the case, Assuming price reverses on the way up and comes back to trigger my stop loss, what will happen is this sell order will be cancelled as my stop loss order is filled. I hope you understand. So, and as you can see in the open order, I have two trades. I have limit maker, which is the sell at the upper point, and then I have the stop loss, which is the sell in case price takes out this buy zone. So that is it for the other types on the stop limit, the OCO, the market, and the limit on the spot market. So as you can see, let me change this here too. So this is a place order tab, and this is a limit. The limit is quite the same as the previous one, where if you want to buy a coin, you place your price line at which the price is the price at which you wish to buy as a pending order, either a lower point or at the currently trading price. Then your size, then the slider for the quantity at which you wish to buy. But there is one thing here. As you can see, there is a TP and SL, which means take profit and stop loss. This means the moment if you trigger this, if you quickly, you can have your take profit, assuming you are buying this coin, or assuming you are buying Bitcoin at this very level, and you want to sell it at this very level, and your stop loss wants to be at this level. So this means here at this price, you have your price, your limit price as 23,042, the amount you wish to buy. Then if you trigger this take profit or stop loss, then you can easily input the take profit price, which is 38,434, and the stop loss, which is 18,631. So you can easily place the order and then click buy long. That means you are inputting both your buy order price, buy order, and take profit order and stop loss order in one trade. So it will place 3 trades on the market. The take profit will also may not be open until your order has been filled, until the main buy order has been filled. Likewise, the stop loss. If you do not do that, assuming you do not use the stop loss function, you just decide to buy, you can come back here and edit the order. Thereby, you can input the price for your take profit and then enter the price for your stop loss. Then when you confirm it, it will display here the price line at which you want to take profit and the price line at which you want to be stopped at in case the market goes against you. So it will open the order and the order will be in your open orders. Likewise, if you have a market, a open position, you can use the market to close instead of coming here to close. You can just close all positions. This is a limit close, so you input the amount, the price line at which you wish to close the trade, which is the upper price line. Then you click on limit. Then this is the quantity. You can select the quantity you wish to close, maybe 50%, 75%, or 100%, or 10% of the position. Then you click on limit. When price gets there, it will close. But if you want to close the market instantly, then you do not need this. You can just select the amount you wish to close, then you click on market, so it will close your position at the available price or whatever price the market is currently trading at. So that is the same. As you can see, it is the same for limits and for market. You cannot select price here, just the amount you wish to close or you wish to buy. Then you either buy long or you set short. And here as well, you can see the take profit and stop loss in case you are buying or you are short in the market. But then there is one thing you will notice here, reduce only. What does this do? This means is to reduce your position, assuming you are in a trade, as I am in this trade at this very moment. So what this means is we have 357 quantity size of VNG. But assuming I want to close it, as I do not have take profit and stop loss, assuming I want to close the trade manually, that means I have to sell back to the market, right? And assuming I want to sell at a price higher, assuming I want to sell at 0.47, so I have 0.47, but then I want to enter the amount of size, which is 357. Sometimes you can make mistake. Instead of inputting 357, you can make mistake and write 375. It does happen. So if you choose to close this market at this point by sell or shorting, what happens is when price trades into your take profit price, which is the price line at which you wish to close, it will close the 357, it will sell it, so you will take your profit. But then the difference between 375 and 357, the difference, if you minus this and the difference, it will be opened as a new position. So you will have that short position opened. But if you select reduce only, even if you make mistake on the quantity that you wish to close, it will not open a new trade. It will only close whatever trade you have, whatever amount of size you have. It will close it and not open a new trade. Because some people, they have long positions like this, 357, then they put double amounts here and do not use reduce only. So they sell short, which means they take profit at the resistance level and then they go short. But if you do not want to go short, you just want to take profit and close the trade, then it's better to use reduce only. So that is what reduce only is for. And here we have the stop limit. I have explained the stop limit as well. You can use it for stop loss, which stop price is the price at which the market will get to, and then stop to put your order into the order book at whatever price you input here, then the amount. If you wish to close a trade by using this, if it's a stop loss, then click reduce only, so it do not open a short trade for you or a long trade, depending on which side you are trading. If you notice here, there is no OCO. OCO is not available here. We only have stop limit, stop market, and trailing stop. And stop market is good, which assuming I have this trade open at this particular point, and I want the market to execute a stop loss when price reaches this level. But I do not know the momentum at which the price will be declining with. Some will be running with force like a huge dump, which means if I use a stop limit, my order may not be filled, and then it will accumulate more losses for me. So the moment price hits here, it will sell at whatever market price or whatever price the market is trading at that particular time. It will sell on the spot. There may be some little slippages as well, but it is better to use a stop market than a stop limit, especially when trading the futures market. And here you have the trailing stop. What this means is callback rate. It means assuming you are in profit and you want to sell your trade there at this upper point. So the moment the price trades into this level, this is the activation price. So this will be your activation price, the level at which you want to take profit. But you do not know if the market will continue more to the upside or it will reverse. So if you're not sure of that, you do not want to lose so much profit back to the market, then what you can do is your activation price, you can put the 0.47 XSS. Then the callback rate will be if this market, after hitting your activation price, if it declines by maybe 5%, then you want it to sell. So your callback rate will be 5 point whatever percent you believe if the market declines from the very top in which you have placed your activation price, the amount you wish to sell. So in another words, price most times we do like this. Price most time we trade into your activation price, which is where you could have taken profit initially and close the trade, but then price will trade into it and keep going up. So your activation price means the order or the boat or the Binance engine will start following price, and if price keeps going up, it wouldn't sell it won't take profit for you. It will just keep following the price, and the moment the price is a top and declines by 5%, assuming this is a 5% decline as we have on a callback rate here. So when this market declines 5%, the moment the engine notices that this market from the higher side of things has declined by 5%, that is the point at which the take profit order will be executed. So if you want initially to execute your take profit at this level, but price is very bullish as it pumps a lot and then it declines 5%, it will sell. So instead of you selling at this very point, you end up selling at this very point. So you have a gain of the distance between here and here. That is for the trailing stop. You can use reduce only also in order not to open more positions. So, okay, there is one more thing I want to talk about. This is mark price. We have mark price and trigger and last price. Last price means this very last price at which the market is trading. That is 0.7922. Okay, see, that is the very last price. And mark price means the index price between several exchanges like Binance, Bitfinex, Bitress, FTS, and others. The index price among all the other exchanges. This is done because somebody with huge pockets can come into the Binance market and choose to market buy a lot. So the market on Binance will shoot up rapidly or dump rapidly, whereas the same is not happening on other exchanges. So if you have your liquidation somewhere around and somebody does an over trading or over leverage positions or over leverage short or over leverage long, it is likely to take you out of the market because other exchanges are not dumping only on Binance due to an over leverage position. So when you use last price, it is you are more likely to be affected by the actions and inactions of other traders on this particular exchange. If this coin doesn't dump back, it only dumps on this, maybe a flash crash on this exchange only, but no flash crashes on other exchanges, you will be taken out. Then when you use the mark price is the index price between several exchanges. So whatever the real price is what will happen to your order. So if you have your stop loss, even if the market you flash crash below your stop loss, if you are using a mark price, if this action is not reflected on other exchanges, then your stop loss will still be intact because the market will just trade back above it. It will auto correct itself based on the index price of other exchanges and Binance in combination, which is the mark price. So that is that. So there is one more thing. Okay, there is one more thing. Here we have post only. This post only means just post your order on the other book or pend it on the other book. Then here we have time in force. What this means is you add some extra conditions to the orders. And here we have GTC. This means good till cancelled. So what this means is if you have, okay, assuming this my orders, I have some orders, they are not filled. So what GTC means, they should be on the other book till I personally cancels the order. So they should be there, either filled or they should remain there even if they are not filled. 100% filled or not, they should remain there until I personally choose to cancel it. Then IOC, this means immediate or cancel. That means it's more of unrest like a market order. That means if I'm placing a trade into this market, limit or no limit, I want it to be filled immediately. If it's not immediately filled, then I want the order to be cancelled. Then fill or key, FOK, fill or kill. So this is telling the market that if I have a pending order on the open order, I want the order to be 100% filled. If the price is trading back into my price line that I'm waiting, I want it to be completely filled. If it's not completely filled, then it should be killed. No fill, except the order coming into the market is enough to take me into the trade completely. If that cannot be achieved, then it should kill the order. It shouldn't fill. That is it, guys. If there are any other questions or there are any other thing you may wish to know, then do not hesitate to let me to ask so I can talk about it. Do not hesitate to also subscribe, like, and share so we can continually bring you all these eye-opening lessons. Thank you for watching.